Welcome to Skills and Learning Development. In this video, we will talk about different saving schemes in post office in India. Let's see first about saving account. In this account, one can earn up to 4% interest. Minimum balance for this account is rupees 50 for non-check account and rupees 500 for the account with checkbook. The interest earned on this account up to 10,000 is tax-free. This account can be transferred from one post office to another based on locations or in different locations. Joint account facilities and minor account facilities are also there, and single account holder can convert his or her account to joint account or vice versa. ATM facilities also we can see in the post offices. So this was about post office saving account. Talking about term deposit account, which remains up to 1 to 5 years. Interest on this is 6.6% to 7.4%. Minimum amount, which is for account opening as well, is 200, and there is no maximum or upper cap. This account can also be transferred, and one can open multiple accounts in different post offices or in the same post office. Joint account facility is also there, and the investment, which remains for 5 years, is qualified for the tax benefit under income tax in section 80C. This was about term deposit or fixed deposit account. Let's see about recurring deposit account. So minimum here you can keep 10 rupees, or you must have to keep that 10 rupees, and again there is no upper cap, and one can earn 6.9% interest per annum. This account also can be transferred from one location to another in different post offices, and multiple accounts can also be opened. Joint account can also be opened, and it has one unique feature, which is rebate on the advanced deposit. For example, in 1 month you are paying 1,000 rupees, and in 6 months it becomes 6,000. Now that 6,000, if you are paying in first month itself, so there will be rebate from post office side. You can avail that benefit. And they have partial withdrawal facility as well, which remains up to 50%, and which is allowed only after completion of 1 year. This was about RD. Let's talk about Public Provident Fund, PPF. Excuse me. PPF, the interest rate, if we talk, it's 7.6%. The minimum amount which you must keep or must put into your account is 500, and the maximum upper cap goes up to 1.5 lakh in a financial year. So maturity period for this is 15 years, and it can be extended up to 20 years. After 15 years, 5 years extension, you can further go with that if you don't require money at that point. So deposit is qualified for the tax deduction. Again, the interest rate is also tax-free, and here the partial withdrawal is also available after 7th financial year onwards. Loan facility also we can see after 3rd year. This was about PPF. Talking about MIS, monthly income scheme of post office. The minimum amount, you can start with 1,500, and it goes up to 4.5 lakh, and one can earn 7.3% per annum interest on this. This is also a transferable account which can be transferred from one post office to another in different location. One can open multiple accounts, provided their sum in those all account should not go beyond 4.5 lakh, which is upper cap. Joint account can also be opened with the equal shares of all joint account holders. Maturity for this is 5 years, and one can also apply for the premature encashment by giving the charges of 2% if it is before 3 years, and by giving the 1% if it is after 3 years. So this was about MIS. Let's see about NSC, National Saving Certificates. The interest rate, you can earn up to 7.6% on this, and minimum you have to invest 100 rupees, and your investment should be in these denominations only, which are 100, 500, 1000, 5000 and 10,000. Talking about benefits, it's single holder account, individual account. Only one person can open one account in this case. So deposit in this investment is also tax beneficial. Maturity is 5 years for this. This is about NSC. Let's see what is for senior citizens. There is a senior citizens savings schemes as well, which is providing 8.3% interest per annum. Maximum amount when we talk about it's 1,000 to 15 lakh. And senior citizens can open multiple accounts in post offices, provided in the sum in those multiple accounts should not go beyond 15 lakh, which is upper cap, and fund should be above 60-year age. There is another case as well, where a 55-year-old and less than 60-year-old can also open this account, provided some terms and conditions in their retirement benefits, and the person in this age should get retired. Maturity for this scheme is 5 years. Premature closure is also there, which remains with a deduction of 1.5% and 1% depending on the time period when you are applying. Either it's before 2 years or after 2 years respectively. So this was about senior citizen savings scheme. Let's see the next, Sukanya Samriddhi, which remains for the girl child. And investment in this is 1,000 to 1.5 lakh in one financial year, and with the interest of 8.1%. So in this, one guardian or natural guardian parents can open up to 2 accounts for their girl's child. So this account, the maturity for this is the 20 years when the girl has attained age of 21 years. Partial withdrawal is also possible up to 50% at age of 18, and up to 10 years age one can open this account. This is also qualified for the tax benefits. So this was Sukanya Samriddhi accounts. Let's see the Kisan Vikas Patra. This can give 7.3%, and the investment remains in these denominations 1,000, 5,000, 10,000 and 50,000, and there is no maximum limit, and one can get their amount doubled in 118 months, which is 9 years 10 months, and can be purchased by an adult for himself or on the behalf of minor. This also has the partial withdrawal benefits, and investment also qualifies for the tax benefits. So this was about Kisan Vikas Patra. So these almost 10 schemes you have seen, which is given by post office to their investors. I hope you have liked this video. Keep watching. We will coming with many more videos in future. By that time, thank you.